Joining me on the line to discuss the economic situation in Romania is Michael Richards, Europe analyst at BMI Research in London. Now, starting from June the 1st, Romania cut VAT on food by 15%, now standing at 9%. According to economica.net, this cut will generate €1 billion of GDP. Now, we have the release of final first quarter GDP out next month, so what are your expectations and your forecasts going forward for the rest of the year?
The Q1 reading, as you probably know, was quite robust at 4.3% year on year, and we expect the final reading to come in close to or potentially even above that level. And over the course of the year, we have a particularly strong view on Romanian real GDP growth. We think it will come in at 3.6% in both 2015 and 2016, and this is well above Bloomberg consensus estimates of growth of 3% in 2015 and 3.2% in 2016. We've long been above consensus on our growth outlook for Romania. We think domestic demand is in a particularly strong position to expand in 2015. Inflation has been at historic lows over the last few months. Interest rates and borrowing costs for consumers has been falling, and labour market conditions have also been improving. So taken together, we think that these factors will drive a significant recovery and strong real GDP growth over the course of this year.
Retail sales increased 3.1% month on month in April. With this VAT cut in place, what kind of figures are you expecting for June?
Well, we could probably see figures of potentially above even 10%, maybe even 15% in June. The most recent reading for April came in at 7.5%, which is pretty strong, and this is before the VAT cut has been introduced. We think that the VAT cut is going to have a sort of significantly inflated impact on Romania, given that Romanian consumers spend around 30% of their disposable incomes on food, and this compares to a EU-wide level of only about 18%. So it's going to free up a lot of spare room for disposable discretionary spending, and as a result we think retail sales data is going to continue to improve from June onwards.
Less VAT on food and low inflation will no doubt enhance the growth of the economy, but is this method of growth sustainable, and what will be the main driver of growth for Romania going forward?
Well, we think that over the short term, certainly for 2015, that these factors will continue to play out. The low inflation outlook will continue to boost the consumer story. But actually over the long term as well for Romania, we hold a relatively positive economic outlook, and we think that both private consumption and an increasingly expansive government fiscal policy could sort of set about 3 or 4 more years of significant economic growth. Particularly on the fiscal expenditure side, the Romanian government has sort of outlined plans to cut tax further and to increase expenditure on investment and on infrastructure. And whilst this has led to rebukes from the EU and the IMF, we think that sort of a low public debt load of only under 40% of GDP and a small budget deficit of around 3% or below 3% of GDP is going to afford the government room to sustainably spend more. And actually, we think this is going to be positive for the country's long-term economic growth potential.
Well, thank you very much for your insight, Michael. Well, that is all from me for today, but join the Dukascopy TV team again tomorrow for more news, analysis and interviews. Goodbye for now.